Hello everyone, I hope you guys are having a wonderful day. I am Arif. In today's video, I'm going to reveal my $50,000 stock portfolio. So it took me almost 10 months to create this portfolio. So today I'll show my top holdings, and after that I'll share some tips that really help me to actually reach the milestone. So without further delay, let's get started. I have logged into my World Simple account. So here you can see the number $49,566 that I have invested so far. And this account has multiple subsections. So we do have personal, we do have TFSA, and also crypto account. So I am staying in Canada, that's why I'm using TFSA. TFSA stands for tax-free savings account. This is a great tool. So the benefit of using TFSA over personal is that under TFSA we don't have to pay any taxes on the gains that we get from our investments. So this is a great tool, but there are some limitations that you can only spend or invest certain amount of money under TFSA in a particular year. For that reason, I'm using first maximizing my TFSA and then moving to my personal account for further investments. So here under the personal account, you can see I have 23 positions. That means I have purchased almost 23 different kinds of stocks under here. It has both Canadian stocks and also US stocks. Under TFSA, I got 18 positions, and this is also same. I have Canadian stocks and US stocks. And under crypto, I got 28 kinds of cryptos in here, but mainly I focused on Bitcoins, Ethereum. So in today's video, it's very difficult to actually cover all the stocks that I'm holding under each account. So I'll just try to show my top 10 holdings under these accounts. At the right side, you can see I have created a trade watch list. So here I have listed all my biggest holdings. So let's get started. The first one I want to talk about is VFV. VFV stands for Vanguard S&P 500 Index ETF. So it's not a single ETF, a single stock, is a index ETF. So that means it is monitoring top 500 US stocks. So it's a basket where we have top 500 stocks altogether. So it's good in one way, that is we are not investing our money in one single stock, and the risk factor is very less as we're spending our money in a small portion in top 500 stocks. So that's why I like it. So if I show you the holdings, my holdings in here, so I have some stocks under TFSA and under also some personal accounts. So in total I got 66 shares, and the value is 5,000, almost $6,500. And here you can see I have gained a good return from this stock. The cool part about this VFV is that if we see the 5 years of stock timeline, so you can see it has gone up from here to here. So June 5, 2018, it was $63, and now the price went up to 97. So you can see it's a very good growth stock. And beside this, here we can see that it also gives us some sort of yield, that is 1.32%. So every month I'm getting some sort of cashback from this stock, cashback or dividend. You can say it's a dividend. So my suggestion to you would be, please diversify your portfolio, and S&P 500 is a great index ETF to hold, and in long term definitely it's gonna pay you a lot of money. The second stock that I want to talk about is VDY, which stands for Vanguard FDIC Canadian High Dividend Yield Index ETF. It's also an index ETF. So it is targeting mostly big financial institution of Canada, because Canada has a lot of financial institution, and this is one ETF that is targeting all the biggest financial institutions. So I think that's why it's a very attractive stock from my point of view. So my holding so far is I have VFV under only my TFSA, because I don't want to pay taxes against my dividends that I'm getting. So here you see the yield is very high, it's 4.28%. So every month I'm getting some returns, and if I hold these stocks under my personal, then I have to pay taxes against my earnings or dividends. So it's always a good idea. So if you are investing in dividend stocks, please first max out your TFSA, because under TFSA the dividend you're going to get, you don't have to pay back any money to the government as a form of tax. So this is a very good investment strategy from my point of view. Even if we see 5 years of growth, it was $33, and now you can see it's going up. It went up to $46. So it's also giving some sort of growth perspective. So it's not only just a dividend stock, we can say it's also a growth stock. And this is highly reliable, you can see, because the market cap is very big, it's 2.1 billion, and the PE ratio is very attractive, it's 10.71. So all the companies that have the PE ratio less than 20 is great. So for that reason, I really love this ETF, and I'm planning to buy more and more in future. The third stock that I want to talk about is Apple, and of course you're all familiar with Apple brand. So under personal account, I have 13 shares of Apple, and under TFSA, I do have 6 shares in total. I do have 19 Apple shares, which is almost $3,000 in value. And you see my the performance based, I have already gained almost $500 in total from this stock. So this is a very good growth stock. If we see the 5 years of growth of this stock, so 5 years ago it was just $46, and now it is $164. So you see in 5 years it went up to $120. That is 272% return. So just imagine, at this period of time we invested more in stock. So for stock market, it's never too late. So this point, so I encourage everyone, if you have some extra money, please don't save the money in your bank account, because of the inflation, the value of the money is decreasing. But if you invest your money in a stock, definitely will go up in future. So your money will grow, and it's kind of like in a passive way, and I like the part that I don't have to work for it. It's just passive. I just invest the money. Again, if we see the market cap is huge. Apple market cap is 2.61 trillion, and the P ratio is 2.28, which is a little bit high, but that's also okay because it's a growth stock, and it's expected to have a high P ratio for growth stocks. And the yield is less because right now what Apple is doing, Apple is reinvesting all the earnings for R&D, and this is great. So in future it will definitely pay off, and all the stockholders will earn way more from Apple. The fourth stock that I want to talk about is Amazon.com. We know this is one of the biggest retail service provider, and Amazon is just not in the retail business. They also have a very good cloud computing business, which is named as Amazon Web Service. I am from computer science background, and I am quite familiar with the technology stuff. So that's why this stock is a must buy from my point of view. If we see in here, I do have almost 29 shares of Amazon stocks, and in total the value is near around $3,000. And right now Amazon is going through some changing phase, so definitely in long term it will pay off, but I think it's a good time for a new investor to purchase this Amazon share in discounted prices, because if we see the 5 years of pricing, so here in 2021 it was $180, and now it's $102. So you are getting a very good discount, and I am pretty certain in future it will definitely go up more than 200 or more than that, because it has the potentiality. So this is a very good stock. Even though this low, it managed to grow 39% in 5 years, which is impressive. The market cap is also great. It's 1.5. So when the market cap is big, that is some sort of assurance for the investors. Then we don't have to think that the company can go bankrupt, because they have the asset or the money to actually make sure they can be operational even in hard times. So this is great tips to actually keep in mind whenever you are buying some shares of a company. Make sure the market cap is in high side if you want to avoid the risk. Right now Amazon is also not paying any any kind of dividends because it's a growth stock, and once they feel like they are stable enough, they are big enough, then they will start to pay the dividends. The fifth stock that I want to talk about is Google. We know Google is a giant technology company, and if we see the 5 years of performance, it has grown by 98%. So if we invested 5 years ago, your money could be doubled by just only investing in Google. Right now the share price $105. So right now I'm holding almost 29 shares of Google's, which is in total a little bit more than $3,000. And here you can see I got some good returns from my investment so far. The market cap is $648 billion. The P ratio is very attractive. If you compare this P ratio with other companies, this sort of growth stock, this is pretty impressive. Just 24, which is very low, and the lower the better in P ratio case. Right now it's not providing any sort of yield because, as I mentioned, that it's focusing on the R&D, research and development. And yeah, I'm planning to purchase more and more because right now it's I'm getting under discount because last year it was 146 to 150, so now 105, so it's a good discount. I'll purchase more and more. And I am a long-term investor. I don't prefer day trading because it takes a lot of time and effort. So I am picking my stocks that will pay a lot in long term. So this is my strategy, and different people have different strategy, but my investment strategy is to be a long-term investor. My sixth pick is Shopify, which is a very big e-commerce platform. So if we see the 5 years of growth in here, so it has grown by 341%, which is really impressive. So if you spent or invested at that time, that was 5 years ago, that was $20, and you could be richer by now if you invested a bit of money, and then you will get your 341% return, which is crazy. Right now I do have 35 shares of Shopify, and you can see I'm getting pretty good return. I got 24% in return so far, the TFS, and 31% return under personal. I believe these are very good numbers. The market cap is also good, that is 74 billion. The yield or dividend is still not paying us any dividend or yield because it's still growing, so it has a very good future. So I would highly recommend to purchase some stocks of Shopify. My seventh pick is Bitcoin. So it is a cryptocurrency, and I'm pretty sure you guys have heard about Bitcoin. I have purchased $2,000 of Bitcoin, which is 0.05% of a full Bitcoin size. And here you can see I got some crazy returns. I got 30% return so far, which is $475. Just I invested 2,000 and I got return something like $475. This is very good, and it is expected this Bitcoin will go up and up in future. So my strategy is like I don't want to go all into cryptocurrencies, but a small portion of my portfolio, maybe 5 to 10%, should be in cryptocurrencies that could go higher, so it can boost my portfolio and it will help me to actually reach my financial goals. So it's always a good practice to actually have some of your holdings in a cryptocurrency or maybe some new IPO based companies. So do that for the boost. My 8th pick is EIT.UN. This stands for Canoe EIT Income Fund. So this is not also a single stock, it's an income fund, index fund. And I hold 218 shares of EIT, which is $2,840. The good part about this stock is that it gives a very high dividend, which is 9.197%. That is crazy. And the P ratio is also very low, that is 8.10. And if we see the 5 years of growth, so it also grew a little bit, like 15% in 5 years. So this is not for a growth, it's a growth stock. This is more of a dividend stock, and 9.17 is a massive dividend, and every month I'm getting very good dividends out of it. So I'm pretty happy about this EIT. One quick suggestion in here: if you want to buy this stock, please buy this under the TFSA, because then you don't have to pay any kind of tax on your returns on the dividends. So please do that. The ninth stock that I want to talk about is Nvidia. So Nvidia is a chip making company, and if we see the 5 years growth, it has grew by 355%, which is crazy. Recently I purchased 5 shares of Nvidia, and within few weeks I got return of 95%. So that means in few weeks my money got doubled. So I highly suggest to purchase this stock. The market cap is also very good, which is $660 billion. And it also provides a little bit of dividend, which is 0.06%. So this is more of a growth stock. It's not a dividend stock. So if we want to really get good return, Nvidia is a share we need to go for, and we need to purchase a share, and we have to hold it for a long time so that our money can get a good value out of it. The last stock that I want to talk about is Microsoft. We all are very familiar with Microsoft. If we see the 5 years of return, so it grew by 200%. So that's what I like about the tech stocks. So it's a very good growth stock from my point of view. Currently I do have 5 Microsoft stocks, and in total it's like near around $1,500 in value. Why I am excited about Microsoft stock? Because recently Microsoft integrated ChatGPT with their platform. So we know that ChatGPT is the next big thing. And right now ChatGPT or OpenAI doesn't have any specific stock to buy. So if we purchase Microsoft stocks, that means we have some sort of exposure of ChatGPT stocks. So this is a very good stock to purchase for now. And the market cap is also very good. It is 2.1 trillion. The P ratio is also great, and it also provides a very good dividend, 0.91% compared to other tech stocks. So I would highly suggest to purchase this Microsoft stock for long term. So now let's talk about why we need to do investing. So the first thing that I'm going to mention in here, that is the inflation. So whenever we save our money in our bank accounts, every year the value of the money is decreasing. So how can we protect our money? The simple answer is we need to invest our money. So when we're investing, we're purchasing a specific share. We are purchasing a portion of that specific company. So in long term, definitely, if you invest in a valuable company, the investment that you made on that company will definitely go up, and in future it will help you to get rich or get your financial goal. Reason number 2, passive earning. So we all know that our time is very limited. So we have 24 hours in our day. We have to work, we have to sleep, we have to spend time with our family. So if we just only focus on only one income stream, that is our job, then we'll have to work for a very long time to meet our financial goals. So if we want to have some passive earning, in that way we are leveraging our money with time. So once we invest our money in the investment in a stock market, then our money is working passively for us. We are getting returns out of the money. So it's creating a new source of income. So and also at the very first, the number will look small, but in long term, because of the compound interest, you can double your money in long term, that's for sure. Reason number 3 is self-discipline. So before I start investing, I didn't have a financial goal, but once I started investing 10 months ago, I know exactly what to do. Every month, whenever I get a paycheck, I keep aside the money that I want to invest, and then I spend the rest of it. So this helped me to build a very good habit of saving. So now every month I'm started to save my money, and now I have a goal that in certain years I'll be here, and then I can contribute to my other dreams that I want to have in my life. So definitely investment it's not only just picking up the stock, it's also help you to become a very wise person with money. I want to thank you guys to watch my videos, because I know time is very important, and you are using your time to actually watch my videos. That means a lot to me. That's why I always try my best to come up with some very good videos that will add value in your life. If you have any questions or any sort of confusions related to the stock market, how can get started, just send me a message under this comment section, and I'll definitely reply you back. And that's all for today, and thanks again for watching my video, and goodbye for now.